What's up guys, welcome to my channel. Hope you're having an amazing time. Super glad to see around 135 followers already. Thanks. In this video I'm going to give a brief analysis about a dividend stock which I'm going to add into my long-term dividend portfolio. I recently am dollar cost averaging into it, so without wasting any of your time, let's quickly have a look into it. Also real quick, just smash the like button, and if you are interested in stock market updates and news and stock picks, feel free to subscribe and tap the bell icon to get notifications when I upload a new video. Okay, cool. So the stock I'm talking about is WD-40 company, ticker symbol WDFC. It's a San Diego, California based company. It's a manufacturer of household and multi-use products. So it's around 36.89, which means it's again having a 17.5 around growth in every year, which is really an amazing growth for a dividend stock. And as I already said, or if I didn't say, I would suggest this particular stock to one who is having little time on their side, not for the ones who are going to retire any soon. So if you look into a dividend yield, it is having a dividend yield of 2.68, and the starting dividend yield was 1.45, which means it's having around 10.4% dividend growth every year. If we assume this growth will be the same for next 10 years, the dividend would be 7.21 by 2030. And if we divide the share price, which is now around 200, we get the yield on cost, which is around 3.9 percentage around, which is not high at all. So when we are looking into a forward PE ratios, this year's 2020 forward PE ratio is 45.09, and the estimated 2021 forward PE ratio is 39.26, which is richly valued because of its growth in earnings. And let's look into some fun facts. It's a staple household product. It is a global company. The global sales are 54% outside America. The Eastern, Middle Eastern and Africa, EMEA, they say they contribute 38% of global sales, and the Asia Pacific contribute around 16% of global sales, which is really cool. So basically it's a 2.5 billion market cap with a global exposure and comparatively smaller and easy to understand. That's something which interests. And as we know, the gross margin, where when you remove the cost of making the product, they have 55% of gross margin, and the operational margin, which comes after the sales, it is 19.5 percentage. And when we look into the net margin after the tax cut, it is 13.2 percentage. And its most selling product is usually which we use for bike chains, locks and hinges. So when we look into the balance sheet, as you can see here, the assets are 300 million and the liabilities are 150 million, and the difference is 150 million. So this looks like a healthy balance sheet with lots of shareholders. And the attractive part here, as you can see, the long-term borrowing, which is just 60 billion for a market cap company of 2.5 billion. The 60 million long-term borrowing is really good. And they, in the earnings call, are clear with their goals and targets and trying to innovate as much as possible in their zone. So on a whole, to conclude, it's a stable company and it's not gonna get replaced by its competitors, and I would definitely suggest this. I personally started owning it and I will dollar cost average into it. So that is it. Thanks for your time. See ya.
You know, I started off in Brooklyn. My father gave me a small loan of $1 million.
Hey, wait! Have a great day.